We're here at REIT Week 2010 in Chicago, and I'm joined by Jason Wren, an analyst with Morningstar. Do you think it's fair to say that REITs have entered a full-on recovery period?
That really depends on your definition of recovery. REITs have recapitalized, right? And thanks to leniency of lenders and regulators, most of the REITs that we cover have come through the recession thus far fairly intact, if shorn of a few properties via jingle mail or so. We also think acquisitions are going to pick up, so there's some legs, right? However, we think that the operating fundamentals are still quite deteriorated due to the low employment rate, and I don't know if you can really characterize a recovery as full-on without an improvement in the job market.
You mentioned the acquisition activity. When do you think we're really going to see that picking up?
Timing is uncertain, right? Now, we certainly think there will be more acquisitions, right? There's a massive amount of transactions that have to be refinanced, and in the absence of easy credit, right, owners will have to either plug in more cash or let go of the properties. So there'll have to be more transactions. In terms of timing, though, right, you also have a lot of properties that, even though they might be severely underwater, right, they're part of deals that were done during the boom, and if they're not coming due, then those are pretty easy terms. So you have these interest hurdles and whatnot. They're pretty easy to jump. So with those properties, right, it really depends on banks and other lenders' willingness to stop extend and pretend tactics.
And with some of the M&A activity, do you expect that to be more private to private, private to public, public to private? How do you see that going?
Well, public companies like REITs, right, certainly are, well, for the most part, better positioned because they've been able to raise the equity or otherwise, just hand back the keys on properties. So definitely they're better positioned to acquire properties. However, REITs are such a small part of commercial real estate that it's probably likely that you'll find more transactions being private to private. However, due to the strength of most REITs' liquidity positions, the REIT space will probably end up being a net acquirer of properties, even if they won't make up the bulk of transacted deals.
Mm-hmm. And lastly, what's your take on all the volatility in the REIT market recently?
We at Morningstar, we actually think that most of the REITs most of the sectors that we cover right now are getting back to fairly valued from slightly overvalued. The only sector that we think is trading at a discount is the healthcare sector. And we think that the healthcare sector will be a net beneficiary of the aging U.S. population, and due to their reliance on long-term triple net leases, right, they're less exposed to the vagaries of the sideways market.
All right. Well, thank you very much for joining us, Jason.
Thanks for having me.
For more information on this and other REIT news and analysis, check out REIT.com.